AI driving demand well beyond data centres. Link Logistics estimates every gigawatt of data centre construction can generate roughly 2 million square feet of additional industrial demand. Let's bring in Luke Petherbridge, CEO of Link Logistics. Luke, explain that to us. How does one contribute to the other?
Yeah, well, thank you for having me again. And it's, this transformational investment that's happening all around the country really is flowing into not just the data centre, but just think of all the component parts: cooling towers, generators, the actual manufacturing itself, servers and racks, and all of that sits in warehouses. And over the last 12 months, about 15% of our new leasing is actually derived from data centre or data centre adjacent demand. So we're really seeing that across the entire industrial complex at our firm.
Across the complex, across the country as well. I wonder if you could talk a bit about that, sort of where you're seeing pockets of growth and sort of what this looks like in real terms geographically as we see this surge of investment in AI.
Yeah, it's a great point, David. Like it really started, if you think about it, in the sort of those manufacturing belts, the Midwest, the Southeast and Texas. But I would say that's proliferating even further. And you look at Phoenix, what's happening there with TSMC and their chip manufacturing plant, all the additional demand that's in Deer Valley and down the western corridor of Phoenix. But it is going further afield, and it's finding places almost in most markets where this manufacturing renaissance is starting to happen.
You have about 500 million square feet of real estate, I guess, right? Is it difficult to find fresh new real estate that doesn't come with community problems, let's say?
Do you know, you're right. So we are a very large owner. We have 8,000 customers. So if you think about just the economic impact to local communities that our customers have in our buildings, it's vast and wide. There are, sort of pushback in certain markets, but we do find our ability to add new stock into those growing corridors, whether it's the northeast corridor of Atlanta, the northern part of Dallas, the southern part of Dallas is still there. But, we're very mindful. We love to be a great community partner. We think there's a huge economic input or outcome of all these buildings and all these businesses growing around the country.
We're talking a lot about the backlog in the context of these neo-cloud companies, certainly the demand for chips, we've seen that as well. Talk a bit about it in the context of the work that you do. I imagine there is such demand for these facilities. How long does it take to build them? How much kind of unrealized demand is there at this point in time when it comes to these structures themselves?
Yeah, I mean, to build a warehouse is, a year and a half, so they're nowhere near the length of other sort of large infrastructure build-outs. But you're right, the demand, what we're seeing actually more from our customers, we had one customer that was taking cooling towers. They took 200,000 feet. By the time we actually finished the lease, they grew to 700,000 feet. Their businesses are growing at such a rapid speed. We're trying to keep up with that. There is reasonable availability in the market at the moment, but that is coming down. So the setup is, data center adjacent demand growing, but you've also got e-commerce growing, continues to grow as generationals change. We've got this new consumer coming that's very digitally native. You also have just general infrastructure build out. Think of everything that's going on around the country. And at that exact same time, new supply is off 50% from the high.
What are the pricing trends like, and who has the pricing power in this market? Is it the lessors or the lessees?
Do you know, it depends by market and it depends by size. I would say that pendulum is probably fairly balanced at the moment. And as availability continues to come down, I think there'll be more pricing power coming to the landlords. We do try to make sure we have great buildings for our customers. We work with our customers as they continue to grow all around the country, but it is very much a market by market specific question.
Could you talk a bit about your approach to the portfolio? So I imagine you're kind of cycling through certain properties, offloading some and adding more to it. How do you think about that, the way that you're keeping kind of a nimbleness to the portfolio?
Yeah, I mean, we're always looking to make sure we deploy our investors' capital into the markets we think has the highest growth, or the buildings. So I think some of that is owning newer buildings that have better access to power, better access to labour, growing in the markets that, we've really deployed capital in Texas, in the Southeast, in Florida. It makes sense. That's where population growth is coming, consumption growth, labour is moving. So we really tried to think not just what's happening over the next 1 to 2 quarters, but where are these trends, these mega trends moving over the next 3 to 5 years?
Have you managed to solve the power problem? Now, I'm sure you need some power in warehouses, right? But in data centers, that problem problem is exponentially greater, I'm sure. What do you do about that?
Joe, it's a great question. I think it's a question that nearly every real estate sector is grappling with. We're working with local utilities, but also I'd start with industrial buildings are a really low user of power. Like if you really think about a traditional industrial building has racking, it has gas-powered forklifts. That is changing as we start to put LED lights in to lower consumption, but then also automation. So we're working with our customers. We are looking at whether it's battery, on-site generation, but we are a low user of power in most communities, and we are able to sort of find the power that we need in most places.
We focus so much here on AI, which of course is sexy and very much of the moment, but last mile delivery very much your bread and butter. How do you balance those two things? Again, kind of the enthusiasm for AI and development at this point in time with what has been something that's so integral to Link for so long.
It's a great point, David. I would actually say that is an appreciated growth engine of the country. If you really look at whether it's Walmart or Amazon or Spreetail, all these companies, like e-commerce continues to grow at a pretty good pace when you compare it to other sectors. And if you then sort of fast forward in the next decade, 50% of the US workforce grew up with Amazon Prime. Didn't learn online. They actually grew up thinking on their phone, things should be delivered in 24 hours. It is actually saying that we continue to see pretty robust strength and quite a resilient and durable demand driver for the industrial owners, and we're definitely partnering with that growth.
How far away are we from cresting on this demand for industrial warehouses?
I still think we have a bit of room to run. I think there's sort of three big, multifaceted demand drivers. E-commerce, this data center spillover, then you have all this new onshoring and nearshoring, whether it's pharmaceuticals in the Midwest. And at the exact same time, we have limited new supply, and it's sort of 50%, as I said, 50% off the peak when we were delivering post-COVID.
And by then we'll be ready for space. All right, Luke, thank you so much. That is Link Logistics CEO Luke Petherbridge.